As the new trading week gets underway, Wall Street is seeing red. The major U.S. stock averages are in negative territory, and the tech sector is extending Friday's losses. Joining me now is Peter Cardillo, First Standard Financial, and he'll weigh in on everything that we have planned for this week. Peter, great to have you here today.
Good to be back.
Well, of course, all eyes this week will be on central bank meetings, especially the Fed. A rate hike is already being priced in, but we do have plenty of uncertainty overseas, including when the Brexit negotiations will begin in the UK and between the UK and the EU. So what do you think is key this week?
You know, I think what we're going to be looking at this week, obviously, is the end of the quarter options expirations. And I think that's what's inviting some rotation here in the market. And it began on Friday. And of course, as you know, the tech stocks are continuing to decline, but we're seeing some money move into other areas of the market. And I kind of think that, with the macro news mostly focused on inflation and retail sales and housing, that will probably have an even balance in terms of the news. And so I think, the market could be in for a little bit of a pullback here, but with a broadening out into other sectors of the market.
And I think going forward, that word rotation will be key here as we take a look at the economic data as well as central banks that rate decisions that come in this week. But I do want to shift our focus on over to oil. Since the last time we've spoken, we did get plenty of action. First, we were higher last Monday, and then we're lower following the EIA figures. And now today we're back up. So in the near term, do you expect to continue to see range-bound trading? I
think we're going to continue to see this trading range between 45 and 50. I don't think we go lower than 45. I mean, that doesn't mean you can't get to 44.25 or 44.50, but basically the range will be between 45 and 50. And, last week, two factors which really weighed heavily on the market. One was the break of the Gulf states with Qatar from a diplomatic standpoint. And then, of course, that introduced a new set of worries whether or not the OPEC deal is going to stay intact. And then, of course, we had a very surprising negative inventory report. But those two factors, I think, are just temporary. In fact, I think Qatar actually over the weekend said that they will live up to their expectations as far as the OPEC deal is concerned, and that's very important. So we'll be looking at Wednesday's inventories. I think we're going to see another shot to the downside. I think what happened last week may have been just an interruption of weekly declines coming forward. And so I remain positive on the long-term outview for oil. I think oil is probably by the end of the year, I'm not changing my predictions, will probably be closer to 60 or 65 as opposed to 45.
Okay, Peter, well, thank you so much for joining me at the beginning of the week. And as always, thanks for your insight.
My pleasure.